Good morning, students. Today's topic is the types of the cost, different types of the cost. And we are going to read them through a case study. Today's lecture will help you to handle well the paper number 2 of the economics and business studies, in which normally case studies come. So concentrate yourself. Today's topic is very important. The cost and revenues of a business will determine the profit it makes. If the business wants to maximize profits, it needs to earn the higher possible revenue and to reduce costs to a minimum. These are the two requirements to maximize your profit. To do this, it must know where its revenues are coming from and what are its costs. The Cotsell Cricket Bat Company is a small private limited company which manufactures cricket bats. It has three shareholders: Frank Hudson, John Wilkinson, and Pete Burns, all of whom work full-time in the business. They also employ two part-time workers. Frank and John had worked for the previous owner, but low sales had forced the business into liquidation. Together with Pete, they bought the business from the receiver. So concentrate yourself. This is the story. This is the case study which you have to read carefully. The three owners of the company want their business to grow and make profits. Their profit is the difference between the value of what the company sells, its sales revenue or turnover, and its cost of the production. This is calculated over a period of the time, like 6 months or a year. And the formula to find the profit is sales revenue minus cost. In practice, there are many ways of expressing profits, such as gross profit, net profit, profit before tax, and profit after tax, each of which has a very precise definition. All of them, however, are a measure of the some type of the revenue minus some type of the cost. The three owners of the business are very interested in the sales revenue or sales turnover of the company. This is the value of the sales of the business. Low sales had been one of the main reasons why the previous owner of the business had made losses. Since the three had bought the company, sales revenue had grown. This was a sign that the company was doing better. The company charges on average £60 for a cricket bat. If it sells 100 cricket bats in a week, its weekly sales turnover would be 60 into 100, which is equal to £6,000. If it sells 4,000 bats a year, its yearly sales turnover would be 60 into 4,000, which is £240,000 yearly. The company makes a range of the cricket bats. The most expensive cost £120, but it also makes some at £40, £60, and £80. So there are four types of the bats which are actually the production of the company. The cheap cricket bats tend not to sell in large quantities because of the competition from the larger manufacturers who gave greater economies of the scale. Economies of the scale is obtained by purchasing or selling in a bulk. They only sell 500 of these beds a year. The sales turnover of cheap 40-pound beds is therefore 40 into 500 because 500 beds are sold in a year which cost 40 pounds. So the total turnover of these kind of beds are 20,000 pounds. This shows that there are at least two ways of calculating sales turnover. So concentrate yourself, this is very important. Sales turnover is equal to average price of the products times the number or volume sold. So because we have read earlier that the average price of the beds is 60. So at an average price of the 60, selling 4,000 beds, turnover would be 240,000. This is one way of calculating the turnover. Average price multiplied by the number of the sold items. And second method is sales turnover is equal to the sum of the sales turnover of each different product sold. For the Cotsell Cricket Bat Company, it is 240,000 pounds equal to the sales turnover of the 40-pound bats plus 60-pound bats plus 80-pound bats plus 120-pound bats. So this is another method of calculating the sales turnover by calculating separately, the different items. One method is multiply the average price, multiply the average price with the number of the items sold. And second method is add separately the different items that will be equal to the total number of the sales turnover. One use that the company makes of the average price is to calculate possible future revenues. So if you want to calculate future revenues, this is the best method to find the average price first and then predict how much you can sell in the future in a particular year. Multiply the average price with the total number of the volume will give you the total turnover. If it could sell 5,000 beds rather than 4,000 beds a year at an average price of 60 pounds. So look now, this is an example. We are predicting for the future. Right now we are selling 4,000 beds a year. For example, we hope in the next year we can sell 5,000 beds. So multiply average price with 5,000. It could increase its sales turnover from 240,000 pounds to 300,000 pounds. Alternatively, if it could increase sales of the 120 beds by 500 and stop production of the cheapest 40-pound beds, then total sales would be the same, but the average price would go up. If the new average price were 80 pounds, sales revenue on 4,000 beds would increase to 320,000 pounds. Now we are going to read fixed and variable cost through the case study. The Cotsell Cricket Bat Company has to pay a number of the different costs. It has to pay for the willow to make the bats. The three owners are paid a wage, as are the two part-time workers. There is the rent to pay on the factory premises as well as costs like the telephone and electricity. John travels 30,000 miles a year visiting sports shops to sell the bats made by the company. And so the company car is a major cost too. Cotsell Cricket Bat Company sponsors 10 players each season who agrees to put the company logo on their cricket bats. The company's overdraft at the bank also costs them interest. So these are some kinds of the fixed and variable cost. Some of the costs stay the same however much is produced. For instance, it costs the same in rent whether 100 cricket bats a week are produced or just 20 because you have to pay for the rent. Costs which do not vary with output are called fixed cost. One very important fact to be realized that fixed cost is that they have to be paid even if nothing is produced. If the company closed down for 6 weeks over the Christmas period due to lack of the orders, it would still have to pay all its fixed costs during the period. For example, the workers who are working full-time getting a wage will we have to pay for them. We have to pay for the telephone fixed charges. We have to pay for the electricity fixed charges. We have to pay for the rents. These are the fixed charges which we have to pay in every circumstances. The fixed cost line for the Cotsell Cricket Bat Company is shown in the figure 23.1. It shows that the business has to pay £120,000 each year, however much is produced. It means the company's fixed charges are £120,000. So that's why this will be a horizontal line that will not vary with the production. They have to pay whatever the circumstances are. So that's why this is fixed cost. Sunk cost vary directly with the amount produced. For instance, the total cost of the wood used go up if more bats are produced. Costs which vary with output are called variable cost. For example, the petrol. More the car will be used, more petrol will be used because one of the member is using office car for selling the bats on different sports shops. Likewise, wood is also a variable cost. More bats are produced, more wood will be used. So wood is also a variable cost. The variable cost curve for the business is shown in the figure. It shows, for instance, that the variable cost of 4,000 bats is 80,000. So this is the variable cost. When 4,000 bats are produced, this cost will be occurred. So the average variable cost, the total variable cost divided by the number of the produced, that is 80,000 divided by 4,000 will be 20 pounds. So this is average variable cost which we have to pay for producing one bat. So this is the average cost line, variable cost line. More bats will be produced, more will be the cost. For example, when we are producing 4,000 bats, cost will be 80,000 pounds. Total cost are the sum of these different types of the cost. It is usual to assume that all costs are fixed or variable. So total costs are equal to fixed cost plus variable cost. A total cost line is shown in the figure. It is drawn by adding together the fixed and variable costs. At an output of 4,000 bats, this is the fixed cost and this is variable cost. So 120,000 plus 80,000 will be equal to 200,000. So this will start from 120,000 because 120,000 is the minimum total cost. And from where it will go up. More the production, more will be the total cost. Now in the case study, we are going to read direct and indirect cost. Some fixed costs are called overheads or indirect cost. Variable costs are then called direct cost. So fixed costs are called indirect and variable costs are called direct cost. For a small business, fixed and overhead costs are likely to be the same. However, strictly speaking, in a large business like public company or multinational, fixed cost and overhead cost have different meanings. Direct costs are the cost of the production like wood and bat. Indirect costs are all other costs like office cost or advertising. The Cotsell Cricket Bat Company keeps a constant watch on the cost. If costs rise when sales revenue stays the same, its profits will be squeezed. Because costs are rising but revenue stays the same, profits will be squeezed. Reducing cost, on the other hand, with revenue constant will lead to rise in the profit. The company uses cost when pricing products. It knows that in long run it needs to set prices which will cover its total cost. The former owner of the company was prepared to take on orders for bats at less than the total cost price. When business was poor, he was prepared to sell at price which at least covered the variable cost, but did not include all of the fixed cost of the production. Concentrate yourself. We are moving to a very important point. He reasoned that any order which helped pay off at least some of the fixed cost was worth taking if the alternative was that his workers would be idle for some of the time. This is known as the contribution cost price. Very important. Some key terms are here. Fixed cost, cost which remain the same whatever the level of the output of the business. Profit, the difference between the sales revenue and cost. Sales revenue or turnover, the money value of the sale of the products by a business. Total cost, all the costs incurred by a business over a period of time. It is equal to fixed cost plus variable cost. And variable cost, cost which vary directly with the output of the business. And now, here is a test for you people that will help a lot for your exams. So try to solve it because these questions are actually from the lectures which you have studied. The first question is, how is profit calculated? Second question is, a business increases its profit but costs too have increased. What must have happened? Next question is, a business sells dresses at an average price of £10. What is the sales turnover of the business if its weekly sales are 10 dresses, 100 dresses, 98 dresses? Next question is, the monthly turnover of the company is £2 million. The turnover of its tractor division was £0.5 million. What was the monthly turnover of the rest of the company? So you have to subtract this value from this value. This was the simple answer. Next is, what is the difference between the fixed cost and the variable cost? The answer is, fixed cost, you have to pay for it whatever the circumstances are. Either the production is much or less or no production at all, you have to pay for it. This is the fixed cost. And variable cost directly varies with the production. And you have to give some examples too. Next question is list two fixed cost. So give two fixed cost example and two variable costs which a music shop is likely to face. So fixed cost may be rent and the wage of the full-time worker, and variable cost may be the cost of the CDs which have to be purchased for the music shop because they are variable depending on the sale, and second may be the electricity bill. Next question is which of the following are likely to be the fixed cost and variable cost for a garden center? Fertilizer, a new car park, ice creams, plant pots, the manager's salary, a new potting shed, new tables and chairs for the restaurant. So this is very important. This is very easy question for you people if you have studied the lecture carefully. So try to solve these questions, students. Read this question. Read this lecture again. Make your notes. Thank you so much.